Well, folks, the smell in the air of spring also comes alongside earnings season. And tomorrow we're going to hear from some big companies, including Bed Bath and Beyond, which many of our viewers will know has taken on a little bit of a meme stock vignette over the last few months and quarters. Let's bring in Anthony Chukumba, Loop Capital Managing Director, with more on this. Anthony, it's great to have you on the program this morning. You've got a spicy note about Bed Bath & Beyond ahead of the earnings tomorrow. You have a sell rating on this stock. You think the target is somewhere around $10. Tell me what you expect to see in those earnings.
I mean, I think the numbers are going to be very, very, very terrible. I think that comparable store sales were probably down in the high single digits, maybe even low double digits. I think they had a very brutal holiday selling season. Now, one of the keys really is going to be their guidance for 2022. Current consensus that they're going to earn about 64 cents a share. I think that's nonsensical. I'm at 25 cents a share. And quite frankly, I think there's downside to my estimate. I mean, this is a company that has lost a lot of market share, has lost a lot of relevance with consumers, and it's really difficult to get those things back.
I mean, $10 a share, significant downside from where it's trading. We just showed it at $18.91 right now. What do you think drags it down?
So I think at the end of the day, at some point, investors are going to have to start dealing in something I like to call reality. Look, there's this notion that this company can be taken private. That doesn't make any sense. It's already way too levered, and the fundamentals are terrible, and interest rates are rising. There's this notion that Bye Bye Baby is worth maybe more than the entire company. Once again, I did a very detailed analysis of that. Bye Bye Baby is not worth anything close to the entire market cap of the company. So I think at some point, as the saying goes, in the short term, the markets are a voting machine, and long term, they're a weighing machine. At some point, the stock price has to reflect the fundamentals of this business, and the fundamentals of this business are terrible.
Okay, so then on that point, it sounds like you're going to be dialed in very closely to the earnings call. I mean, the strategy for Bed Bath & Beyond has been kind of set out in the shape of perhaps, reinventing their stores. Perhaps we've seen that in the Manhattan location here where I stopped by a few weeks ago. I mean, is any of that important? I mean, what is the biggest story if there would be some turnaround that might incentivize you in the future to perhaps raise your price target? What would you like to see out of the management from this company?
So therein lies the problem, which is that they're already doing all the things that I would have wanted them to do, right? So let's rewind a little bit here. A couple of years ago, a trio of activist investors got involved with Bed Bath & Beyond, and they were saying all the right things, right? You should sell your non-core assets. You should rationalize your merchandise assortment. You should do more private label. They did all of those things with this new CEO, relatively new CEO, who came in with, big credentials, used to run merchandising for Target. None of it has worked. The patient is too far gone. I call this JCPenney 3.0. The reason I call it JCPenney 3.0 is, remember, JCPenney 1.0 was when Bill Ackman got involved with stock. He brought in Ron Johnson, the guy who had founded the Apple stores. That didn't work. JCPenney 2.0 was a couple of years later when they brought in Marvin Ellison, longtime Home Depot executive. He's now running Lowe's, doing a great job there. That didn't work. I just think that the patient has stage 4 cancer, so you could bring in, a reincarnation of Sam Walton. It'll be too little, too late.
You're just getting wound up. I can see it, Anthony. There's a common thread between Bed Bath & Beyond, the stock you're talking about now, and then, of course, GameStop, which is a stock you used to cover. I know you no longer cover it, but Ryan Cohen, I'm looking at your note here, and I'm thinking how many times you said the emperor has no clothes. What do you mean?
Well, what I mean by that is, look, I'm not taking anything away from Ryan Cohen. He has at least 3 zeros in his net worth more than I do, right? He founded this company, Chewy. He sold it for $1 gajillion. But let's just rid ourselves of this notion that somehow he's the next Warren Buffett, because he's not, right? Look, he bought a big stake in GameStop. He became the chairman. He brought in all these executives, brought in all these board members. The stock went up a ton. But have the fundamentals of the business gotten any better? Any better at all? The answer is no. And by the way, the stock peaked at $483. It's now down to about $150. Same thing with Bed Bath & Beyond, right? He bought this stake in Bed Bath & Beyond. He brought in these board members, but in his letter, he said, oh, you could easily take this thing private. Oh, no, you can't. He also said, hey, the market cap of Bye Bye Baby is more than the entire market cap of the company. Once again, no, it's not. So let's just rid ourselves of this notion that he's the next Warren Buffett, because he's not. The emperor has no clothes.
Okay, Anthony, just to kind of push back on that, though, I mean, some could argue that, yeah, even though Ryan Cohen is going about a different way of doing this, he has encouraged the stock to go up. Yes, it's definitely fallen from the highs that we've seen, but I don't think anyone 3 years ago would have predicted that GameStop's shares would be where they are right now. And they've tried to use that as a financial maneuver to improve the position that the company is in. So when you look at actions like scooping up 100,000 more shares of the company, I mean, given the circumstances of GameStop and its ridiculous story over the last 2 years, is it maybe not that bad what Ryan's been doing?
Look, the only thing that he's done where I applaud him is he took advantage of, the meme stock, moronity. And I don't know if that's a word, maybe I made that up, but I think you know what I'm getting at. And he did issue more shares. And so, so basically they took advantage and they basically gave themselves a financial cushion of, to live to fight another day. But I'm just talking about the actual fundamentals of the business. Have the fundamentals of the business improved? And the answer is clearly no. And so until I see some, evidence, at Bed Bath & Beyond, I'm just not going to buy it. I mean, call me a boomer. That's fine. I mean, I have to look at the fundamentals of these businesses, not on what's going on in Reddit message boards.
I mean, you as an analyst need to look at the fundamentals, but isn't the reality that these stocks, whether it's Bed Bath & Beyond or GameStop, just haven't traded on the fundamentals? And to your point, do you think they should lean in on the meme trade like we've seen from, for example, Adam Aaron over at AMC?
So, let's just, you can easily do this. Pull up the stock price charts for Bed Bath & Beyond, which got caught up in the meme stock stuff before, for GameStop, for AMC, for COS, for, Newegg. I mean, yeah, these stocks go up a ton, but then they come back down because at some point, there just aren't enough of these, sort of meme stock traders in the world to support these valuations long term. And at the end of the day, I mean, that's, at some point, these companies' stock prices are going to reflect the fundamentals of the business. They just are. And if they're not, like, I hate to say it, but we're going to all be looking for new work.
Well, I certainly hope not. But I want to ask just kind of the big picture question here. You've been doing this for a long time. I mean, the investing landscape and the story and the narratives that we're following in 2022 are very different than they were in 2018, 2017 because of the prevalence of this retail trader and Reddit boards, for example. Is it on net good or bad for capital markets as an analyst when you watch these types of things?
So, look, I want to be very careful about the way I answer this. Look, I think that it is wonderful, absolutely positively wonderful that you have more and more people, getting involved in the stock market at an earlier age, right? I mean, this is how you build wealth. This is how you save to buy a home, save for retirement, save to put your kids in college. But at the end of the day, there's a difference between investing and doing it in a sort of reasonable way and, going on a message board and, talking about, diamond hands and, to the moon. I mean, that's not investing, that's gambling. If you're going to do that, go to the casino. At least there you get free drinks. So, look, I like I said, it's wonderful that retail investors are doing this, and we're seeing more and more of them doing that, particularly retail investors of color, quite frankly. But, like I said, there's a difference between investing and gambling, and this is not investing, it's gambling.
That's why we like to have you on, Anthony. You never hold back. Anthony Chukumba, Loop Capital Managing Director. Good to have you on and hope to have you back on the show again soon.